presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hey, Robert, how you doing, man?
Yes, good, and thank you for taking my call. I wanted to let you know that I've been a subscriber for a couple of years, just different members of your team, and I really enjoy it. But really the reason I'm calling is to express my sincerest gratitude for you providing that information yesterday on the small business grant. I'm a small business owner and primary breadwinner for my family, and if I can get that money, it's going to really mean a lot to my family. So
that's awesome.
Thank you for taking the time to do that.
No, well, listen, man, we appreciate you growling and prowling with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. The TGIF. And think, folks, a week from today, that's going to be Christmas weekend. I got to go shopping right after this. To master love, you have to practice love. The art of relationship is a whole mastery. The only way to reach mastery is with practice. To master a relationship is therefore about taking action, not about attaining knowledge. Market-wise, let's take a look at it out here. We have the Dow Industrials down 390, NASDAQ off 137, S&P's off 57. Gold contract up $15.20, traded at $18.03 an ounce. We get silver up 8 cents, $23.38 an ounce. Light sweet crude down $1.88, $74.23 a barrel. Notes and bonds. A 10-year note down 3 ticks, trading 114.26. The 30-year off 29 at 131.05. And King Dollar. King Dollar's up 166.6, trading 104.725. Euro's at 105. Yen is out here at 136, and the British pound is at 121 to 1 U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Well, you get a monster ABC structure on the way down. You failed at the highs, and guess what? We're moving lower with volume. So bottom line is that we're going lower, man. I suspect we're going right after this low. The way this is trading out here today, the gap that we've been talking about is 381.14, but today we got the 381.04, so you got to the gap. You're going to have a huge expansion of volume because it's quad witching. And then if you put this on a weekly, it's so, like, just sticks out like a sore thumb. When these stick out like a sore thumb like this, it's like, really? You know, when we were trying to get highs, right, we did volume of, and that's a weekly volume now. The first, I'm going to go back 5 weeks. This is the fifth 5 weeks. So the first week I'm going back to November 18th. So check it out. 401 million, 210, 426, 364. Now we're going south with 502. We're probably going to have 520. Now, we didn't even have that. We had 517 at the low. That's an acceleration. The trend line's already broken. You can see this. It's broken in spades, too. Okay? But we're going, man. We're going to the lows. You know, we'll see what happens at the highs of the lows. But the way this is trading out here today, this is telling me that, and we've seen a few of these, meaning, you know, I remember, you know, when I just came into the studio right here, folks, and sat down, I remember so explicitly, and I forget what Christmas Eve it is, though, and I got a feeling that that's why it started off that the Grinch is going to be here again, because what had happened is that as soon as I sat down, I remember, I just forgot what year, it just never stopped on the way down. And that's what, that might take, that's what's going to happen. You only got 2 or 3 days to save this market before, you know, no one's going to be there. And if the accelerations are down and the trends are down, the market's going to go down. We take a look at the Qs. Same setup in the Qs. The Qs are down today, 390. The gap on the Qs is 268. We've only reached 272 thus far. That being said, though, watch this. As soon as you put it on a weekly, it's a disaster. It's a disaster on the daily, but on the weekly, it's just like shows, okay? So the weekly, you get 288 million. and the lows at 367. So that's a little bit, that's definitely better than the SPY, okay? But the bottom line is that we're going south. And if we take a look at the IWM, which I talked about in the update, you're going to see this baby, man, is signaling. So the IWM, it went by the gap. The gap is 178.67. The swing is 174.37. Well, it's blowing that away, too, and it will have volume. The highs of the lows is 172.20. So watch this. This is where it's really giving us a heads up. The expansion here is amazing. Look at the expansion of volume. It's 153 million. We were trying to make a high with 125, with 69, and with 104. Are there more sellers or more buyers, folks? Pretty easy. You don't have the charts there? You should have the charts. 1 second. Yeah, you got them. You got the charts. I just reset it. So you can see this, man. This is not cool. This is telling me that the larger ABC down more than likely is going to basically come into play here. So if we put this, let me put this on a monthly, and let's see. Okay, so look at all that support. So the high of the low for the IWM is 154. The lows that we established are 162.50. Yeah, we're going to go right for those. It'll be pretty intense, shaking it out, man. There's no doubt about it. So let's go take a look at the good old dollar, because the dollar, hasn't had any traction, man. It's trying to get it, and, maybe it saved itself. We'll see. What the dollar did do, and this is why this market is, the dollar's only up 128 ticks, and the market's still getting smoked, okay? This is what's, bizarre. It's not bizarre, but it is what it is. But you can see, yesterday, we'll see we'll see if there's any follow through next week. What we've done is that we went from 114 3 months ago down to 103, and the bottom line is that correlation on the way down is a direct correlation of how we went up, and then we just turned. That's the reality. We go take a look at. So let's go take a look at a couple of the E-mini. We got a few of the Tigers playing white lightning here, and they need some fuel for a bounce. Let's see what we have here. Okay, so let's back up. Okay, so the last two bars. This is what basically the problem is. Right there, you'll get a little bit more, but I don't think this thing's going to go over 38.99. And you're at 38.78. Might be enough for you, but that's kind of how this is set up. It's 38.82 actually. So it's about 5 points from where we're at. And on this bar here, let's see. This has some time. That's only right now. It's only 4 minutes into it. In 4 minutes, we have 17,000 contracts. You're going to be coming into 47,000 contracts. Stay right there, folks. We're coming right back. Our phone number is 877-927-6648. Come right back, folks.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials right now down 285. We got the NASDAQ off 93. S&P's down 43. So weekend-wise, folks, the way that the markets are set up, we have a full week next week. So what happens is that because Christmas and New Year's are on a Sunday, the markets are closed Monday. So it's going to be celebrated on Monday. Now, what's really cool is that last year we didn't get that extra day off at New Year's. We didn't, you know. But so bottom line is that, you know, we're talking about, you had a full week this week. Next week would be 4-day, Tuesday to Friday. The following week will also be Tuesday to Friday. So we'll see where this whole thing's going to shake out. Let's go inside the Dow Industrials and take a look at the strength versus the weakness inside the Dow. Oh, hey, this is pretty cool. No, let's go look at this. I want to look at this first because this is something else, man. I knew, let's go look at this oil contract, right? Because, okay, pull this up. Okay, so right now you're at 74.15. You're lower today. It hasn't been able to hold price. Let me pull this up, CL1. I want to see, because this is, so what happened out here this morning, folks, and you know what's amazing about this is that the market still hasn't been able to hold. Let me put this on. Okay, I'm going to put this on a 2-year weekly. And look at this, okay. So you can see, you know, at the highs of the market, the last leg down, if we go back to June of this year, oil was 123. Well, the government started buying oil back today to fill up the reserve. And check this out. This is pretty wild. So the average price of all the oil sold was $96. And it's really amazing to me that they know that they have a buyer in the market now, and oil can't even hold. That's just telling me, man, oil's going lower. You know, that's the bottom line. You know, you start filling the reserve at $70. If they can keep it there, man. But that's telling me, the point of this story is that telling me that oil is going lower. Because now you know you have the government in buying oil and you know they're going to buy a lot of oil. And guess what? There's more oil in the market than the market knows what to do with. So, you know, that is a heads up like beyond belief. And getting $96 a barrel is average is pretty amazing. There's no doubt about that, man. Yeah, no, I get the diesel thing, but you know, they'll have to figure that one out. But we'd all like that trade, man, in a monster way, you know. So let's go take a look at some of the higher volume equity. Oh no, let's go look at Tesla because he's screwed. Musk, this is an ABC down. You know, he lived by the sword, and he's going to die by the sword. It's going to be pretty incredible watching this thing shake out, you know, because when you have the billions, yeah, you know, and they're still going to have billions, I'm sure, but he's going to have a lot less billions because this is, look at this. Look at this, man. You got to look at this. This is crazy. So watch this. Look at the volume on this break. The volume on the break is 649 million, and the B point only needs 331. So you got an A point out here. That is laying out, what do we got? Let me get this straight. That's 237.95. No, 237.39. That's your A point. Your B point is 166.10. That's a 71 A to B. Your C point is 198.92. That gives you okay, so that's a 127.63 on just a 1-to-1 A to B equals C to D. Yeah, and as one of our targets said, the amazing part is he stepped on himself. That's the amazing. You know what the amazing part about this whole Musk deal, folks, is that you know, I mean, he's bigger than life and all of this. Okay, but he's the one that did it. He did it to himself, man. It's like crazy. So we take a look at this. What's the number? We're looking for 127. Where's 127? There's 119, that high right there. You know what? This is going to be sick. It's going to $64, man. That's where we're going. See that high volume? That's the monthly high volume bar. $64.59. How's that? Oh, boy. Here we go. This is something else, man. I'm telling you, man. We'll watch this play out. Let's go to Keith in Cedar Rapids. Hey, Keith, what's going on, brother?
So is it too late to short that?
No. Not even close.
I didn't think so.
Yeah, right.
Hey, Tom, I got a question. I'm really digging in, trying to understand your methodology.
Yeah.
I've used Larry's for years. And I was wondering if you wouldn't mind walking through time in the trade on the DIA.
Okay, so let's start with, I guess the way to start. So what I do here first is go like this. Let's go back, and then we get the DIA. I'm going to put it on a 2-year weekly first, okay? So the reason I'm going to do that is just I want to get some clarity as to, okay, what is it doing, right? You see what I'm saying?
Right.
Okay.
Yep.
So the way I always do this, I always go to the higher volume bar in the bottom first. And the reason I do that, then I can get some clarity as to what it's going into, okay? Mm-hmm. And in this particular case, you can see this is like a monster, man. I mean, the diamonds had real juice, but you can see that it was going into 92 million on the way down. See where I got my bar right now?
Yep.
That's why I couldn't break it. It was going into 92 million with 22 million and then 26 million, okay? So it's like, okay, I can see why that stopped there, right? Then let's bring it into a weekly. Okay, so now we get it in a weekly. And now what we have, you're going to see the same bar. See that same bar is laying there on the weekly, okay? So that was the stopping point of it. Now what we have is that the bottom line is you couldn't bust them up. That's the bottom. And now we broke the trend. Now I'll put this on the dailies. Okay. So.
Yep. Okay.
Okay. So now.
And then would you use fibs from the high put out here in November to figure out where you would come down to?
You can go like this. You can go. It's a great question, man. You can go take the bottom, right? And that's one trend. Okay, now let me get a pad because I got to do this. Do you understand how confluence works?
I'm reading the book.
Okay, that's all right. We can do it right on the air. So what happens with confluence, this would be the first setup, okay? That, you know, what you have is that you have confluence. So confluence is in between a 0.382 and 618, okay? So in this particular case here of different trends, right? So this one here is saying, you know, you get 324s at 0.382, okay? Then, that's one trend. That's the bigger trend, okay? Now, stay right there. Come right back.
Okay, thanks.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrial's down 260, Nasdaq's off 91, S&P's down 41. We're talking with Keith, and we're talking about, in this particular case, confluence inside of markets in general. So, Keith, what happens is that confluence is between a 0.382 and 618 of separate trends, okay? So the first one that I did was the larger trend, okay? From the bottom, you got a 0.382, right? The second one I did is, let me clear this so you can kind of see, because you definitely have 2 trends that were done here. Meaning, here's the first one. You pull back for 2 days. Here's the second one, okay? To the high. So what happens here is that when you do those numbers, you get 324 to 329. So what ends up happening is that, let's do this, 1 second. This gives you, I'm going to just put 324 because we've already we're at 329. You can see how we're at 329? So that, come on, give me this track. There's a track. 324, there's 321, 328, 324 is like right in here somewhere. So 324 is right in here, not farther below. So what ends up happening when you get confluence is that that's telling you that's where you do have support, okay? Now, that doesn't mean that's where it's going to, but confluence is a really good indicator. Let's say if this was a bull market, that'd be a great indicator as to where to buy, okay? But I suspect this 324 is going to get broken, okay?
Right.
And, you know, so then, I mean, I guess the reality, I'm going to bring you over to the SPY. I mean, you understand how to do ABC structures up or down?
Yeah, I do, but I'm still pretty green on it. If you know,
okay,
it always helps to see it again.
Okay, so an ABC structure, either up or down, goes like this. The A to B point, I'm going to do the one on the way up first. The A to B point, you go up with volume, you pull back with light volume, and you go up with volume. Right. If it's an ABC structure, folks, a confirmed one, as it takes out the swing point, the B point, it'll have higher volume than the B point. So your probability gets much higher that you'll achieve your price projection, okay? On ABC downs, what ends up happening is that you have the A to B, you do a counter trend bounce, you're down with volume, you're up with light volume, you come down with volume, you break a B point, break it with volume. That's how it works. Now I'm going to show you the one in the SPY right now, okay, on the monthly, because this is the biggest one that you all want to pay attention to, folks, okay? Because when you're looking at markets, right, that, yeah, you can do the daily, the weekly, and the monthly charts, okay, to figure out where you're at. But it's important to understand the monthly, because the monthly are the things that's the bigger picture. Then you put the daily and the weekly together. Well, on the monthly, you know, bottom line is that we have a, you know, big ABC structure down. You got, let me get this one.
Mm-hmm.
You got A to B, and these take, you know, what ends up happening with the monthly also is that because it takes so long to set up, when you're in it, now in this particular case here, I think we really lucked out because this has been going on for so long that everyone had a chance if they believed in it. Do you know what I mean? That, okay, we're going down, okay? Because look at this now. You get 462.07 is your A point, okay? That's going to be the high of March. And this is a conservative way of doing it, by the way, Keith, okay? I'm not taking the high because what I'm doing is I'm taking after we did that little bounce, okay? And it could be to the top. I'm not sure, but when I do these, I do the most conservative you can so your probability goes higher. The B point on this is 362.17. So you're minus 362.17. That's going to give you a 99.90 A to B. Your C point is you're going to minus 431.73, which gets you 331, okay? And you're going to see the last low we had is 348. And bottom line, 1, 2, where am I? A, B, yeah. C. Down here, the highs of the low just the highs of the low of March are 313. So, you know, the bottom line is that my take is this is low are we going. That's the bottom line. And what we are having out here today is that you're gonna you get a break and you get a break with volume.
Got it. Okay, I appreciate that. One last thing on the DIA.
Yeah.
That bar. Let's see on a weekly. I think I had it.
Let's put it up. We'll put a weekly up.
Yeah. On the weekly.
Yep.
As we come down, and there's that bar of the week of the 24th. There was two higher volume weeks there, the 31st and the 7th of October, November.
October.
So if you look at what I'm seeing here, if you look at the week of the 31st.
31st of November?
Of October.
October, 1 second, okay. 31st, I have it right there. So that's 24 million shares.
Okay. So we're up, and unfortunately I can't see the damn volume.
But we're coming down. We're coming into that with monster volume.
Yeah, we're coming down into this. So obviously we break that, we got big problems, right? And then
your take is we'll definitely get into that bar from here. I mean, it looks like there's no way around it, right?
Is this the bar that the top of the bar I have is on right now, the end of the week of the 28th of October?
I've got yes, that would be, yes.
Yeah, so the high of that is 328.89, and we're at 329. But you're coming into that, when you come into it with volume, it basically, your probability goes higher that you're going to get into it. We got into it today, but we only got into it today by, what is this, 328. Yeah, you got into it by 2 points. So we'll see where this ends up. But we got into it by 2 points already. And then what you also want to pay attention to, Keith, is that when I was going through, you see the small caps. The small caps are already bypassed everything. The S&P has volume. The Qs have volume. I mean, if you're long, put a stop in right now.
Right.
Because that's what I'm hearing. So,
gotcha.
I've heard this a million times, man. And I know it's really tough. If you're in a losing position, I'd get out, man. I'd, just get out. Because if you gap down, who knows? It's, this run's over, man.
Cool.
But,
cool, man. Hey, you're the best.
No, I don't know about that, but I'm just trying to help you. What happens for all of us, folks, is that the longer you do this, the more mental calisthenics you have in your head. So I've already been where you are. You know what I'm saying? It's just, and listen, man, there's a lot of different ways if this is a short-term trade, I would not be long. You can lose a lot of money, man. That's the bottom line. Because we don't know whether this is a 1-to-1 ABC down or something else. You know what I mean?
Well, I've got some short-term thing. Then I got some long-term. I'm not quite sure what to do with the long-term stuff, whether to just sit aside or not. That's kind of my dilemma. And so,
well, let me ask you this: do you know the option market at all?
Pardon?
Do you know the option market at all?
Not enough.
No, okay.
Not enough.
Because you can sell calls for stuff that you keep.
Right.
Yeah, just stay there for a second. Stay there. All right.
Okay.
Dow Industrials right now down 236. Nasdaq's up 78. S&P's down 36. Stay right there, folks. We'll come right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. Dow Industrials down 225, Nasdaq's up 74, S&Ps are up 36. We're talking with Keith, and we're going to bring the Dow Industrials up for a second. So let's talk about, is your biggest position in the Dow?
Yes.
Okay, cool. Okay, so let's bring this up. So when we take a look at it, the bottom line is that when you take a look at this on a monthly basis, right? I mean, you're still, at highs.
No, I definitely see that, Tom. My dilemma is, do I just, it seems like every time I step aside, I get a rocket right back, and I suppose I can just deal with that. But what I was, or maybe I do half or something, and then I don't know. That's my biggest problem.
No, I get it. That's why I'm bringing the Dow up, because what has also happened is this. This is what I want you to this is how you have to think this through, right? You didn't sell when the Dow was down at 29,700, right? Or 28,000, right? So is that correct?
Absolutely.
Okay, cool. Okay, so now picture this. You're 4,000 points above that, right?
Right.
So the real question is that okay? Now, is this in an IRA or a taxable account or non-taxable?
It's
both.
It's actually in both.
Both, okay. So your non-taxable accounts, I'll tell you in a second, man, I wouldn't let that take any heat at all, because you're not going to pay taxes on it anyway, right?
Right.
Your taxable accounts, the way I'd look at this is say, okay, I'm here right now. If I come down and retest the lows, how am I going to feel? 28,700, right? Or maybe go lower. Or how am I going to feel if we go up another 4,000 points? So I mean, do you see what I'm saying? Is it going to be life-changing? The way that I do this on every investment I make, man, I'm telling you, is I go like this, is that, like in the real estate market, I sold into that frenzy. I sold over 120 pieces of real estate into the frenzy, okay? And when I was doing that, I didn't know whether I was going to be right. I just knew that I felt with the bonds going up that there was going to be a problem, okay? And I felt that, hey, I have a score, man, and I'm going to take it, regardless of how much taxes you got to pay or anything else, okay? And I could have been wrong, but what I did is I says, okay, I'm at this point. If it goes up 20%, how would I feel? Versus going down 20%. I said, oh, man, if it goes down 20%, I don't want that to happen. And that's what you got to kind of do with yourself. You see what I'm saying?
I get you, man.
Because if you can take the heat, that's one thing. But, I've found that to be a decent way that you can decide that you can get away from the greed, get away from the fear, because you got both now. Do you know what I mean? You get it's like, well, what if I get out now and, it does this? I can tell you in the non-taxable accounts, I would pull the trigger quicker, man, for sure. You don't,
Right.
You don't have a 30%, tax bill on that, or 20% or 36 or whatever that's going to be. So that's a whole different ballgame, man. I wouldn't mess with that. Maybe that's, anyway, you got some parameters, man.
Yeah. Do you believe international capital is attracted to the Dow more than other markets?
I hear what Steve says, okay? And what does happen, the way I look at all markets is price and volume, man. I do is I do the same thing over and over and over again, and it's pretty consistent, So it's possible. As far as I'm concerned, though, are there more buyers than sellers, or more sellers than buyers? Because when you look at markets, and what blows my mind is this about markets in general, and the amount of money that people actually put in markets and don't take out, is I've seen equities many times go from $10 to $100 and then right back to 10. That's how this market seems to be. I mean, it's like, that's how it, and you just have to make sure that you sell at some point to get your money out,
Right.
And particularly,
Right.
when we see, CFOs, CEOs, they sell, and, the mantra in a longer-term deal, I think a longer-term deal is still good. I mean, I tell anyone that's just starting in the marketplace, buy the SPY and forget it. And don't even look at the marketplace and keep it for 30 years, and yes, you're going to have money, period.
Right.
But when you start playing with 4 or 5 years, I think it's pretty dangerous. You know what I mean?
Right. Yep. I do.
And what ends up happening for all of us is that if you start getting a little fearful, it's worse, because then our thought process is not as clean. You know what I'm saying?
I 100% know that.
Yeah. No, we all do, man. Listen, we're all the same, man. We all go through these things, man. And it's just trying to program yourself, and I'm saying that in a great way, not because that's what ends up happening. Somehow we have to do that. And, if you do, right. Anyway, just whatever you do, you're going to sit there and you're going to think that, okay, if I do this, even if the market is up 20%, am I going to be all right? Versus if the market is down 20%. And that will give you the answer, man,
Right.
Because this interest rate structure is not going down, So these markets, and I don't think that we've actually seen what can actually happen here, I just don't. I think people have, Anyway, you get the gist of it. And we're going to send you some good white light, all right?
Thank you, Tom. You're the greatest.
Okay, man. Have a great one. Have a safe one. And, folks, that's all of us. It is, the longer that you're in this, what tends to happen is when I bottom line, we were just talking about the, aspect with Keith about is it higher and what do you do with that money versus lower? I find that really works. And one of the best lessons I ever got, and I knew this beforehand, and I remember sitting in the condo meeting with this guy. So what had happened is that I owned the first floor of 1 McKinley Square in Boston when I was like 32 years old. Beautiful building, 1776, all granite, right? And we're at one of the condo at the meetings. This is like 3 or 4 years after it. And, I was, brand new, 30 years old, whatever. Do you know what I mean? Just, getting my feet underneath me. And then I'm at this meeting and, I hear these two guys talking about the aspect that I had just bought this unit down to the bottom floor. And I heard them talking about, I can't sell this. I'm not going to sell this because it's got to pay too much tax. I'm not going to do this. Well, bottom line, man, I remember just sitting there listening, saying, I'd like the idea that I'd have to pay that many taxes on, so much money. I didn't say a word. Well, guess what? 2 years later, man, the bottom line, the market fell out in Boston. And they didn't have to go out paying taxes because all the properties got cut in half, not cut in half, they got cut like 30%. And that to me was such a heads up, was unbelievable. It was like, because what had happened is the guys I was talking about, they didn't need everything they had. Each one of them had 2 floors. Anyway, you get the gist of it. Don't worry about, there's a difference of longer term if it's not in a non-taxable account. There's no doubt about that. You have to take into consideration what you're going to pay versus a taxable account. Dow Industrial's down 266, Nasdaq's down 103, S&P's down 43. Stay right there, folks. Come right back.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Dow's down 249, Nasdaq's off 94, S&Ps are off 41. And we're going to get monster volume out here, folks. We'll take a look at the indices right now. The indices, we're at, you had 900 million already in the NYSE. So that's going to bang out about 1.4 billion. And on the composite, you're at 4.6. That's not that bad, actually, in the composite. That means we're going to do about 5.6. That's not a lot. Let's go look at the composite for a second. So the composite, the gap on the composite is 10,564. We hit 10,642. We're at 716. You know what I just realized here? Check this out, man. Yeah, this is, protect yourself out there, I'm telling you, man. Because the composite is already at the lows. 10,766 is the highs of the lows. It's already into it, man. The NDX isn't, but the composite is. So this could be a monster ABC down. Let me pull this back. Okay, so let me see this. I got it on a monthly. Will this line up? I don't know if we'll line up the volume with it. There's one, let's see. Down. Yeah, see, the composite didn't have an ABC down because we come down with 26 billion shares. But then we broke that with 22 billion. The bottom line is that You know, on the weekly, you're already into that bar. So that's telling me when you put this together, what you have, you're coming into the Christmas week. You're going to have a couple days, to see if the market can do something. The dollar, right now, it's a heads up. It's a toss-up, rather, whether it will get any juice this week. Right now, you're up 131 ticks. All the indices are down on volume, and you get the larger ABC structure. Always remember, folks, the bear can claw your heart out, the bull can run you over, and thank God there's always another trade. Health, happiness, and prosperity. Have a great weekend, folks, a safe weekend. Come back and visit Tommy Monday morning. Kicks us off 9 a.m. Great show, folks. Look at him, folks.